Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies SOFI stock. We're going to be going over their latest news updates as well as the new price targets that have recently been issued by analysts. Apart from that, we're also going to go over other news stories and analyze articles about Upstart, so we're going to be going over the bearish and negative aspects of this company as well as the bullish positive aspects of Upstart as a business as well as their UPST stock price. So of course I will be issuing my own opinions as we analyze these articles throughout the video. So if you want more news updates, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and if you want to know the top stocks that I am buying on the market right now, don't forget to go and press that join button right next to the subscribe button to become a member of this channel so you can have access to my portfolio, get updated on the best stocks and the top stocks that I personally am adding to my stock portfolio, as well as how I plan to build wealth over the long term on top of many other perks. So without further ado, let's just jump right into today's stories. The SoFi share price currently trades for $5.76, while professionals believe the company is worth anywhere between $7 and $11 per share. However, recently, we can actually scratch these two price targets because those are old price targets, because today we have gotten some new price targets according to tip ranks. I'm also going to go over their latest marketing news and how Sofi Technologies could acquire more members over the next year. Right now, investors are very eager for the start of the NFL, particularly for the National Football League's 2022 season to officially kick off. And Sofi Technologies is actually going to benefit from the NFL kickoff because Sofi Technologies has great exposure to the NFL economy. But what do we mean by this? Sofi Technologies is going to benefit massively from this because of the mass marketing that the NFL brings to various companies. If you didn't know, Sofi Technologies is an online financial services provider that gives their consumers an all-in-one inclusive digital app which gives them the ability to access various financial services and products such as student loan refinancing, auto loans, home loans, checking accounts, savings accounts, credit cards, debit cards, and a plethora of other financial tools. The NFL, which is the National Football League, is currently comprised of around 32 teams, and the 2022 NFL season is about to kick off on September 8th. But what does this have to do with Sofi Technologies? Well, first I want to point out that you can't directly invest into the NFL, but the NFL has a very large economy, and for companies that are a part of that economy, they normally go up during the NFL seasons. Some of these companies would be Nike, Verizon, Dick's Sporting Goods, and DraftKings, as well as Sofi Technologies. Sofi has secured branding rights to put their name on an NFL stadium over in Los Angeles, which is home to two NFL teams, which are the Los Angeles Rams and the Los Angeles Chargers. And this facility costs around $5 billion, to where Sofi has built a stadium which would include hotel spaces, retail spaces, as well as office spaces. Sofi has struck a deal with the NFL to actually purchase branding rights for the arena for 20 years, making it one of the most expensive NFL stadiums ever to exist, and the stadium is also anticipated to host both the opening and closing ceremonies of the Olympic Games in 2028. This gives Sofi a very large marketing pool to potentially bring in people who watch the NFL to join Sofi Technologies. This would benefit Sofi Technologies in a plethora of ways, but mainly by driving awareness for what this company does as well as the trust within the company. So in essence, Sofi Technologies has secured branding rights, and they will be marketing to the NFL's economy and all of their loyal members to potentially gain more members from the NFL, which is going to be absolutely fantastic. And we have seen them do this last year, and during the time of the NFL season, their members grew exponentially, so hopefully we could see that as well. More good news is that in 2023, the company has the potential to become profitable on a generally accepted accounting principles basis, and in the beginning of 2023, we know that the student loan moratorium will end unless it's extended again, which is highly unlikely. This will cause a surge in demand for their lending products, specifically their student loan refinances. So with that news update, what can we anticipate for the stock price over the next year? Well, if you've been following along with my videos, you know that SoFi stock has declined around 60% year to date, and it has an average price target of $8 right now. However, the low-end price target and the high-end price target have both changed. Originally, we had a $7 low-end price target, which has now been changed to $6 according to tip ranks, and then we had an $11 high-end price target, which has been changed to $10. Now, this is only relevant for the analysts that have been surveyed by this particular platform, where they say that there are 5 analysts that advocate a buy rating for this company and 4 analysts that say to hold the company, with the average price target, like we said, coming in at around $8. But nonetheless, this would mean that at the current stock price of around $5.92 as of this recording, this would represent a 12-month upside of 35.14%, which again is very good, especially if we compare it to the overall market. More good news stacked on top of that is we are seeing hedge funds buy more Sofi Technology stocks and purchase more shares. You can see the stock price in this graph, which is represented by the yellow squiggly line, which has been on a very dramatic downtrend. However, recently, we have seen hedge funds being very positive on this particular company and buying up shares to where in July of 2022, many hedge funds have bought up Sofi Technologies more than the other previous months, which is extremely positive, especially if we can compare it year over year. So overall, I can't wait for 2023 because I think that's when the Sofi stock price will start appreciating positively in price. Now, over the next 3 months, the company is supposed to be very volatile and either become stable or drop in price even further, which is why I personally am looking forward to 2023 so we can finally get the fruit of our labor where the stock price is set to increase again. Now, if you're not sure whether or not to buy Sofi stock right now, you could wait until 2023 after the market uncertainty, or at least after September, because September historically has been some of the worst months throughout history to invest into the stock market. There is another company that is similar to Sofi Technologies, and that is Upstart, which currently trades for $24 per share, while professionals believe the company is worth anywhere between $14 and $38 over the next 12 months. Now, personally, I believe that Sofi Technologies is a much better investment than Upstart, because I believe Upstart's stock price could definitely fall even more, so I'm waiting for it to fall and eventually bottom out. Upstart as a business has been striving just to maintain their stock price during this current economic environment, where the stock price at one point back in October of 2021 hit a price as high or even higher than $401 per share. However, recently the company is trading at around $24 to $25, which would represent roughly a 94% decrease for this particular company, which is absolutely very negative. So first we're going to go over the bullish positive case for this company, and then we're going to go over the bearish and negative case, and then I will give my opinion. Upstart, if you didn't know, is a software company that is powered by artificial intelligence, where they use underwriting policies according to their AI technology to deem whether or not various loan applicants and borrowers can actually pay back any debt or pay back their loan. Upstart is trying to uproot and trying to transform the banking industry and credit unions, as well as car dealerships, to pry them away from the traditional credit scoring FICO scoring system that Fair Isaac is most known for. Because the FICO scoring system assesses someone's loan eligibility on how much debt they can take on and how likely they are to pay back that debt. Now, Upstart particularly believes that their AI technology is much better than their FICO scoring system, which allows various financial institutions to not only issue more loans, which gives them more money, but also believes that some people are overlooked from the traditional FICO scoring system, which their artificial intelligence technology can identify. So basically, some people are disqualified from various loans because they don't score very high on the FICO scoring system, so Upstart actually gets to steal these customers away from institutions that are using the traditional FICO scoring system. And overall, I actually agree with them that the FICO scoring system is definitely not the best scoring system to determine if someone can pay back debt. However, I don't like Upstart's artificial intelligence technology. I actually prefer Sofi Technologies' artificial intelligence technology because they also have their own underwriting policies to determine who can pay back their debt. The bullish case for this company, though, is that the stock price has dropped so dramatically that it's pushed the company's market cap and their overall valuation to around $2 billion. And this means that the company could be undervalued according to some significant accounting ratios. So many investors are taking this time to buy the company because they do believe that it's undervalued. Now, I think the company would be undervalued if it drops below $14 per share, and that's when I would actually start buying this company up. but as of right now, I have very, very little exposure for this company because I do believe the company's stock price can continuously fall, not because inherently that they are a bad company, but right now they are absolutely getting slammed due to the negative macroeconomic environment. They just can't really swim right now in the pool and the flood that is coming in from higher interest rates and higher inflation rates and a lot of other things that are going on in the overall market right now. Now, the good news is that Upstart is valued at only 2.3 times this year's expected sales. On a non-GAAP adjusted earnings basis, they are only trading at around 36 times their expected adjusted earnings, which is very positive. Both of these metrics do look very good, and that's why many positive investors and bullish investors believe that this company has a fantastic potential upside based on its current price. Now let's move over to the negatives about this company, because I want to give you all the bullish positive news and the bearish negative news so you can make your own investment decision. The bearish case for this company is that right now is just not a good time to invest into companies like Upstart because of the overall macroeconomic environment. The shareholders have already lost confidence in this company because the company has lost over 90% of its value from their highs. Management also anticipate that the sales are going to decline quarter over quarter if we go into their quarter 3 results, which have yet to be released yet. So with the potential risk of a very negative macroeconomic environment and management expecting their sales to overall drop quarter over quarter, this does not look positive for this company. That's why I believe after quarter 3 and into quarter 4, the company will continuously drop in price and then maybe can become a better buying opportunity, or at least a better entry point for the majority of investors. But right now is not a good time to invest into this company, in my personal opinion. It's also possible that the loans that Upstart has previously assessed as healthy loans through their AI technology are now coming under pressure based off of increasing interest rates, because if any of the people whom they gave their loans out to are now experiencing greater inflation, which is going to lower their overall purchasing power to buy everyday items and even pay off other types of debt, particularly if they have any type of flexible loans. That's why, in conclusion, according to less favorable macroeconomic factors and the company projected to bring in less than impressive financial results quarter over quarter, I don't think right now is an ideal time to buy this company. Now again, I want to make it clear, I'm not saying that Upstart is a bad company, but right now I really don't see their business model doing or performing very well in this negative macroeconomic environment. Now, with that being said, we have to keep in mind that both Sofi Technologies and Upstart Holdings are very risky companies. However, I think Sofi Technologies has a lot less risk than Upstart, because Upstart to me is a high risk stock, while Sofi Technologies is just a risky stock. So it's a different level of risk. Also, I want to point out that we don't want to gamble with our portfolio. That's why I have very little exposure to a multitude of companies. For instance, if I use my 5% initial allocation rule, that could allocate me to around 20 good companies, or more than one company per sector. And that allows my portfolio to maintain and retain its value during times of stock market uncertainty, an economic recession, or a stock market crash, which is why currently my portfolio is still in the green, while a lot of other investors' portfolios are in the red right now, and it's because of my good risk management policies. We also just don't want to bet on 1, 2, or 3 companies, because that would be improper risk management, because if any of those companies go under, you are losing around a third of your overall portfolio. That means you are taking on unnecessary risk of potential losses, and I do not advocate for that. In my opinion, that would be gambling, because we have to remember, all gambles are risky, but not all risks are considered gambling, and we need to keep that in mind in terms of investing. If you are wanting to bet on just a few companies, you are gambling. But if you want to have a very well diversified core portfolio of investments that are all high performers, then that is how you invest and build wealth over the long term. And that is the approach that I have been taught, and it has paid off very well over the last few years, especially during times of stock market uncertainty. So if you want more videos like this one, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.